My name is Crozier and I'm Sompo's Head of Corporate Casualty in the UK, and it's my pleasure to host this episode of Redefining Risk with Sompo. For this episode, I'm joined by Sally Roberts, Head of Corporate Casualty in London. We are digging into the shift in market dynamics in our industry, the evolution we are seeing in risk profiling, how AI is impacting the way we perceive risk in casualty, and more. Join us for this episode and subscribe on your podcasting platform of choice to receive the latest insight. Welcome to the Redefining Risk with Sompo podcast. I'm Crozier. I'm joined today with Sally Roberts, and we have been in the industry now for over 50 years.
Scary,
between us.
yes.
A combined number that, not individually, I hasten to add. Today we will be talking about the market dynamics, the specific around product, risk profiling of products, how that's changing, emerging risks, and things that keep us awake at night. Moving from hard market to a soft market.
Yep.
We experience various challenges.
We certainly do.
Yeah, and we're often, obviously, we're in a soft market for a lot longer than we are in a hard market.
Yeah.
But the dynamics are shifting and have shifted over the last, probably 12 months or so.
Oh, very much so.
What have you been seeing in terms of day-to-day around behaviours from other markets, from other underwriters, other lines of business, whatever what experience have you seen? We can't
ignore it. There is a drop in rates.
Okay.
There are some areas that are holding rates, and I would say that for certain industry sectors, like healthcare, for example, it's an area that you constantly have to be on top of. Heavy exposed risks like US, that's just incredibly topical at the moment.
Yep.
Everyone's talking about it. It's just, where's that market going, and how sustainable can it be? So parking that aside, there is a drop. There is some unpredictable behaviours that I'm seeing from various markets. It's a bit of a fight out there.
Yeah.
And it's tough. It's a tough marketplace to be. It really is.
Yeah, that behavioural piece is difficult to navigate, actually, and try to predict, because people are starting to protect their portfolios a bit more.
Yeah.
I think there's retention is becoming key. Probably adequacy of rate is much higher off the back of hard market. So they are becoming a bit more possessive around their portfolios. Interesting you say about US exposures. Actually, is having that's a pocket where we aren't seeing as much movement in rate, right?
No.
And we're seeing opportunities from a FAC point of view where carriers are buying
100%.
Facultative reinsurance.
And they're reducing their capacity.
Yeah.
So that area, we're seeing, and obviously for us being fairly new, there can be some, good advantages to take.
Yep.
But obviously making sure that we are having a sustainable rate applied when looking at those risks.
Yeah, the US is on everybody's agenda.
Yeah.
And especially around liability. Less so on other lines of business, but on liability, it's a lot more volatile at the moment. So that's having a funny dynamic on everything, I think. And back to the point about behaviour, and what we're hearing from our US colleagues, at least, and from other markets, is there's a much more caution around capacity deployment and the volatility of losses that are happening. And I think some markets in London are acknowledging that, are seeing that and feeling that, but it does come down to communication internally between their US operations and their operations in London.
Yeah, how close they are.
Yeah, how close they are, or sometimes how close they're not.
Yeah,
right?
Very much so.
Yeah,
we talk to our guys all the time.
We do.
And the average loss, gone are those days where your average private car loss is 1-2 million. You're now seeing it kind of skyrocketing to 10 million.
I don't think we're really seeing any consistency in general market behaviour. It is really quite, I keep using the word volatile, but it feels...
But it probably is the right word as well.
Yeah.
Because it does feel, like you said, volatile, and it does feel... We mentioned the word unpredictable, and you're kind of seeing some markets looking at risks which they wouldn't normally do.
Yeah.
And it's hard to predict that kind of behaviour as well. And to the lengths that some people are going in terms of dropping rate. Is that sustainable? When you look at the depths and how much we've seen risks drop by 500,000. I mean, they're big numbers. It's not little numbers, they're big numbers. And that's to retain risks.
Yeah. I think also, I don't think there's any individual market that is behaving in a certain way. No. There's inconsistency between insurers. We're still getting inconsistency within insurers as well. And it also depends on the risk profile that's being looked at.
And it's kind of like, where does this level out? How long does this go on for as well?
It makes me think about actually integrity, because there's the overall approach and principle of business, right? But I think there'll be a lot of underwriters, insurance companies will be challenged around that. But also, I do think that performance. So there's been some results recently being published for Q3 for various insurers, and because of the relatively low cat season, it hasn't been too much impact across other lines of business. Some of the performances. Loss ratios are low 80s to high 80s, which is quite remarkable. So adequacy.
You're maximising it. Yeah.
So that's a case of, well, if this business is running at this performance level, even if it drops by 10% in rate, why would you not keep hold of it? Because it's still performing really, really well.
And it always makes it harder then as well, doesn't it? And it's that tough balance, isn't it? We've been around for many years in terms of targeting it when you know that price level is now here. But equally, on the flip side of that, you can kind of understand. I mean, our book's relatively new, so we haven't got, in terms of that, it will come to us, that renewal piece and the large accounts to secure and hold on to tight.
Yeah, definitely. Sum it up.
And the decades are changing, aren't they? I mean, industry is changing. How we trade, how we evolve. I mean, we've seen brokers change. We've seen, some people wouldn't even, like brokers, if you looked at a slip and the actual stamping, I had to do that recently. It was like, you have to stamp every page. You have to. So everything's changing as we go along. And the hard cycles and the soft cycles change as well. So it's different disciplines, and we are in the AI era, and that's changing again, isn't it? It's of where we're going.
Yes, it is. Either the use of AI within industry, on the actual, from a broking and underwriting point of view. You mentioned there about trading, right? Yeah. This feels like there's more.
It's more trading platforms.
It's becoming more of a commodity at a certain level of business, simpler business. But how many conversations have we had with brokers around facilities? So you talk about AI there. Well, we know obviously there's existing platforms out there, but we're being asked, what platforms have you got that can help with that trading? And then how do we as an industry use AI internally? Yeah. And then obviously from a client's perspective, what are they doing integrating AI into their products? Yeah. And how does that change the risk profile?
Because if you go back to, a few years back, when we're trading and we are going back to the manual stamping slips, you think how long that's taking away from actually doing business. Yeah. When now it's a few buttons to press, and it's a lot quicker from both the broker, from us, which AI has given us to turn around and go, right, that's done. Now I can concentrate on this.
Yeah, I use that the old saying. Time is money.
Yeah, very much so.
So if anything can be traded quicker and more swiftly and more effectively and efficiently, why would you not do that? And from a customer's point of view, right, client's point of view, integrating AI into a manufacturing process that just makes it quicker, can churn the product out so much faster. Why would you not do that? Within regulations. Yeah. So, of course. So that's I think we're all trying to figure out ourselves what does it mean, right?
And what does it mean to us in our line of business?
I think there's a lot to come on this. So then thinking about it as changing of risk profile, right? So we start to get blurred lines a little bit, I think, with cyber. So there's a lot of things that have happened recently on cyber attacks, and certain retailers have been targeted, and there seems to be inconsistencies of how
airports,
who's being targeted, right? I think it's bigger companies, bigger organisations, bigger effect, maybe. I don't know. There seems to be, talking to our cyber underwriters about that, it isn't necessarily certain areas that are being targeted, right? Or certain businesses are being targeted for whatever reason, right? But there are. Cyber attacks, I think, we don't know half about what's going on.
Yeah,
all the time.
Don't all show. Yeah.
But the blurred line piece, I think, becomes about from a coverage perspective, where you've got integration of AI into a product, so autonomous vehicles. Actually, is a good one, right?
Yeah.
Autonomous vehicles. If there's an accident from a car that's being manufactured, arising from the AI that's being deployed, where does that sit? And if that's been attacked from a cyber perspective, okay. We used. I think we were talking about an example the other day of a major manufacturer of autonomous vehicles. If their network is compromised, and then they're able to control vehicles, and it clearly causes accidents, incidents, is that a motor BI property damage claim, or is it then merged over because it originates from a cyber attack, and then how do the policies respond?
Or is it a product, depending whatever it is, because with the EU directive coming into play and adding in software, etc., as a recognised product,
definition of products.
All those lines are blurred.
Yeah,
which is always the case. As much as we can prepare, look at it, strategise, plan it out, it's never going to be 100% clear. There's always going to be, like anything in liability, blurred lines, grey areas. I mean, that's the beauty of what we love about what we do. And you're right, case law, etc., will start to help us define those areas.
It's funny you say that. It makes me think about the last X amount of years of my career where liability, I was pulled and attracted towards it because of the breadth of it, the kind of the grey area, that was always very interesting to me. And I've become very comfortable with that grey space, and it's kind of fascinating in a way, specific to casualty line of business. But
and I love that as well because products and things are ever changing. It's exciting. It's new stuff coming through.
There's solutions in
there. How do we solve that problem? How do we find a solution?
So solutions. That's what really drives me. It drives me personally. And I know that there's others, and I know you're very like-minded, right? The ability to sit down and have an engagement with a client, have an engagement with a broker, and maybe claims as well, or risk engineering, whoever it might be. Look at the problem, try to understand the problem, and then try to create a solution around coverage, around products, around gathering data around that particular issue, and being creative. I think that we know that's when you think about the quite often referred to the triangle, don't they? The triangle of risk, and you've got simple risks at the bottom. Many of them small businesses, the corner shop.
Yep.
Okay, not really going to come up with anything particularly solution-driven there, really, when what we're talking about there is sophisticated, big corporate organisations where they've got risk management departments that you can sit down with them and really talk about specific issues. So that's why I always quite like the grey area, right? Yeah,
I love the innovation. And it's always difficult because insurance is always the bit behind, running after
that's a good point.
To find a solution for that.
Yeah.
Whereas these guys, and you could take that anywhere, are kind of running ahead. You could take from the AI and the wearables in the healthcare space. Is wearables now? We all talk about, we're getting to that age of going, how did you sleep? And you've got now wearables to tell you, I've got 4 hours last night.
Yeah, there is. There is going to be a point where there's almost like kind of information overload.
Yeah, but is that a product? Is there an issue with the algorithm, and is it become like a PI? Does it become a medical malpractice or a device?
I think for not only for insurers but for clients and brokers, you have an acknowledgement of what that is. Yeah. An education around what that means, and then also from purchasing from a product point of view, an insurance product point of view, does it satisfy the scenarios that may be created because of that?
Exactly. And should a claim arise, Christian, I mean, what bucket does that sit in? Who comes
to the point
first?
Of the blurred lines piece, yeah.
Exactly.
Yeah. I think between liability and cyber, I think it's relatively clear at the moment around product definition in the sense of cyber stop at the BI and the PD, body injury and the property damage piece, right? They're more about the financial loss and the financial impact. And then you have obviously casualty. You'd be possibly expecting us to be picking up PD and BI arising from an event. But I do think that
if we add in financial loss and some
loss,
other covers.
Yeah. So we had to be I think actually both lines of business had to be conscious of where do they meet, where do they dovetail, or where they don't. And that's a really interesting area that I think should be explored or researched. Cyber's a very when you look at the scenarios that have happened recently and the impacts and the costs.
And who's to say, with AI where it's going in a few years' time, will be holograms sitting here. Won't be us physically sitting here.
Could be. Could well be.
Be a podcast done by the holograms of Christian and Sally.
Thinking about future, we talked about future and AI.
Yeah,
and how that's integration, how that's advancing, how quick that's advancing, and that's an area of emerging risk or profile. What other areas for you? I have a few in mind about what's either emerging or what's concerning or what's on your, what kind of makes you think, what keeps you awake at night in sense of problems and challenges. For example, social inflation.
Yeah,
it's not emerging; it's kind of here, but
it's not emerging. And it's been coming on for a while now, and it's not just in the US; it's in Europe. It's taking a momentum of its own.
Yeah.
So it is a concern, and that's not going away. I think that's going to just get louder and louder.
Yeah.
As time goes on as well.
I think it's the control around that.
It really is. Yeah.
And there are I think insurance companies and legal entities who are dealing with claims have a responsibility to try to control that.
Yeah. And the generations coming up, Christian, they're more empowered. They're a very different generation to probably what we are, and they know their rights, and they want the wrongs done of the past, and it's.
Yeah, it's a very having kids myself and where they're getting to in life and their age and generations. Tolerance. It's a very different world now to what it was 20, 30 years ago. Absolutely agree. I think what it is also doing. So another thing that kind of keeps me concerned is inflation. Inflation is a thing, not only personally because everything costs more, but when it comes to claims, especially in liability. And more also property, obviously, because the cost of materials is obviously increasing and going up. Is that from a modelling point of view, so actuarially, when we are reviewing risks, the factors of which we have to apply to get the go forward position. Mm-hmm. I mean, we see it ourselves. I mean, the inflation factors and the social claim trending factors are increasing considerably over the last 5 years versus prior. It's so less stable. And what that means is it's getting harder to be able to price business when there's, volume of claims heavy accounts, right?
Yeah, very much so.
Yeah.
So there's a lot there to unpack. And I think probably for today, Christian, I'm not sure about you, but I think
we've covered a lot at a high level perspective.
We could talk about this all day.
We could.
I think for us to close out for now until next time.
Okay.
So if you liked our podcast, then feel free to like, share or subscribe.